All right, what's up, guys? I have a 50K Apex account here, 50,233. I'm going to show you guys how to scalp on a low time frame. This is going to be more about risk management than it is going to be about strategy. You can use any strategy, but there's a certain style of risk management that's going to allow you to really succeed with these evaluations or really fail with them. So that is the goal today, is to teach you risk management to get funded, pass evals, and get payouts. So I entered short right there in my zone, at my redelivery zone. I'm going to go ahead and exit 2 of these as it comes into there because I scale out. So I would say if there's like an ultimate rule to passing these evaluations and getting payouts, is you have to scale out. Rule 1, scale outs are non-negotiable. You have to scale out. It's not like, oh, well, maybe I might do it. I don't really know. No, it's none of that. You have to scale out. I do not know a single trader that is profitable that does not scale out. Like, that should tell you right there that it is the super powerful thing and you should be doing it too. I don't know anyone that doesn't do it, guys. From ICT to every actually profitable trader that isn't just trading demo, they scale out, man. You have to. And if you're asking why, it's because it allows you to mitigate your risk. You know, if I scale out at 1R, then let's say I have 1R remaining. So I've taken off half the risk of the trade, and then I've mitigated the remaining risk on the trade. So if I originally entered with 2R of risk and I exit 1R risk, how much risk do I have left? You have a remaining 1 negative R remaining. So a plus 1 and minus 1. What is that? 0. That means I would have 0 remaining risk on the trade. I may have an opportunity to add in here. So if you're comfortable with exiting on your own, like your stop loss doesn't have to be hit for you to exit the trade. If you're okay with that, you can add in when it pulls back. But if you're not, do not do that, because it's going to lower your average entry, right? And then if it keeps pulling back and your stop's way back there, and you're not able to just go ahead and exit because it takes some discipline to do that, it's really going to hurt you, and it's going to count as a double loss. So let's say I add in right here and it pulls up and I get stopped out up here. I have that negative 300 because it's a trailing drawdown. So that counts as a loss pretty much if my account's at all-time new highs. I'm going to wait for the pullback I'm looking for here. Let's drop down a little bit more. All right. So I'm going to go ahead and add on there. And then now I'm going to enter 2 more in the evaluation. So now I will not allow my stop to get hit. I won't do it. Beautiful. All right. Now we're going to want to go ahead and take one of these off as it breaks that low, because we're scaling out. We're being responsible. Should get a nice flush here. Beautiful. All right. I'm going to go ahead and exit one of these as well. NQ looks really bearish here. The fact that ES is not going with it. We've taken low a day on NQ here, and ES has done nothing. It's just stalling right there. So I'm gonna take one more of these off. Let's go ahead and add the next point here. Add on only if you're willing to sit early. If wrong. I don't know that feeling, right? When you're wrong, you guys, I know you've experienced it because I've experienced it a million times. When I'm wrong, I'll have this feeling of like, oh, I can tell, like I start going, oh, like I'm wrong. I can tell I'm wrong. And I used to not do that. I used to just allow my stop to get hit, even though I knew I was wrong to 300, sometimes $400 before there. I knew I was wrong. Is a daily bias needed? I do not think a daily bias is needed personally. I think you can just do fine without it. But with that being said, you need to have areas of price where you think it's going. So I have outlined this is where I think price is going. Therefore, I don't think daily bias is really a good thing. I think you can have one, but I don't think it's going to be beneficial for you to be locked into it. I think it's better if you just have an areas of price where you think it's likely to go. And then once it starts going that way, trade that way. Beautiful trending market here. Very, very nice trending market. Now, when it's trending like this, I like to use trend lines sometimes, depending on how the price action is. If it's like this, really trending really well, then I'll go ahead and use them. Now I'm gonna go ahead and enter there and there. So now I've added back in. See how much it draw? I entered 2 more contracts. It brought my average price way down, right? So there's like my emergency stop. Like if it wicks up, I want to be protected. Well, you're starting to see what I'm doing here. I'm adding back in once it breaks these lows with expansion. I go ahead and take some off. Ojis are balance. So see how it hit the 50% there exactly. So I'm gonna go ahead and stay in this. But I kind of lost a little bit of confidence there. So I just took one off and see where it put my average price way back up there. So let's go ahead and take one off with that eval account. So we're already at 1500, halfway there to passing. My goal is to pass this by the end of the video here, because they're really not that hard to pass if you're trading in and out, scaling in and out, or practicing solid risk management. And by solid, I mean you're just not like exiting at half an hour. Price is coming back into an area where I think it should reverse. So see there, I was wrong. I went ahead and exited. There we go. So now I exited early, saved myself a potential $300 or so, at least $300. Well, I'm gonna go ahead and enter short there. There she goes. So now I'm already thinking, where do I want to take one off? So where this gray line is at, that's where I'll take one off. Take one off right there. Beautiful, right? Beautiful setup there. So then look at price going right to where we predicted it last night. Beautiful. I'm gonna take another one off there. So you can easily trade 2 accounts at one time. It's not like right through that line. We have another zone right below it that it's probably going to. Beautiful trade. Now this becomes where it's tricky. Look at ES crash there. Go to the zone I picked out to the tick. Beautiful. Beautiful. All right, I'm gonna go ahead and drop down on both of these. I'm not gonna exit though. It's still one time framing up. We have not taken out the previous candle's high yet. There's no reason that this couldn't continue down even farther. I have another zone right below it. See there? That's why I did not exit, because there's no reason to yet. Now I'm going to add on with this eval. I'm going to get a little bit more aggressive here, knowing that price is likely to head to here. And then I'm okay with staying in it as long as it's not taking out the previous candle's high. So now we have a zone here, redelivery zone that we can use. All right, so then I went ahead and added on here too. There we go. All right, so now I'm going to go and take one of these off now. That should pass this eval here once it reaches there. Take one more off. Now I'm back to 1-to-1. I need $700 more here, which we should be able to do that with that move to there. So that's 20 points. especially if we get another pullback to add on to. Definitely. And then at the end of the video, we'll review like some of the main points. Obviously, I'm trading right now, so it's a little bit difficult to like, you know, explain it in detail because I'm thinking, I'm trading, I'm thinking, I'm trying to do both at the same time. But I believe that's the only way that traders can really truly learn is by doing it this way. So we're still one time framing, no reason to exit. There's no reason. Never once did it break one time framing here. Right there, it did for a split second, but went right back below it. So use this even on a 15-second. If you do it on 1 minute, you can catch an extra 100 points. Because remember, my profit target was right here. If I would have exited full there, I would have missed out on all this. So now we have another add-on point here. I missed it though. I'm not going to do it now because I missed that move. That it doesn't look like much, but that's like 4 points. So ES is like crashing lower. There goes NQ. So I think that should put us the eval done. $300 more. All right, but I'm going to take one more off here. I think this just shows the power of my redelivery zones here. I'm not using liquidity, no inversion fair value gaps, no reapers, no unicorns, no breakers, no mitigation blocks, just balance. All right, there's my profit target. I went ahead and exited in my live account there because, you know, the pullback could be pretty savage here as it hits that zone, like to the tick. So I'm gonna go and exit. All right, so let's look at the P&L so far. So $2,300, not bad. In what, 24 minutes? Not too shabby, right? Okay, so we have another add-on area here. So if it rejects, you know, as per my rules, I can add on here. I'm only going to add one contract. Why only one? Because my confidence on this is not all that high. So when I was thinking about the odds, like what are the odds about me winning this trade right now? So in my head, I said about 50-50. So why would I enter 3 contracts when I think I'm only going to have a 50% chance of winning? Which that's usually what your chances are for a trade anyways. Unless you have like a really good strategy with a really high win rate, with a lot of confluences to it, market structure, broad context, high time frame analysis, then, you know, you're looking at more like you could pull off a high 80s at the max. But to do that, you have to put in the hours of work, right? Before and after the market closes. So we're going to reject here. Now if it takes out that candle's low, because I don't want to be shorting into one time framing up after just hitting a zone like that. A redelivery zone. Still hasn't ended yet. There we go. All right, I'm going to go and add on there. I'm going to get in on this in my funded account. I'll probably hear a payout with this trade here too. And then I'll have another funded account. X has 1 day to pass right now. I'm going to go and exit the trade here. No, I shouldn't have. But that's okay. I'd rather exit it. It broke what it was supposed to do. It wasn't supposed to go all the way up there and double top. That wasn't part of the plan. I'm going to go ahead and re-enter here. And then you just re-enter. Like, what's the matter with re-entering? It's no difference. The only difference is the amount of money you're going to lose, right? If you hope, well, you think it should. I'm not in the business of hoping. I'm in the business of calculated risks. So you get a good push down here. I'm going to exit there, take a small loss on that. All right. We'll have to wait for the price action to kind of tell us that. Let's go back to the 30-second chart here. There's an area of balance here that I expect price to be heading towards. Doesn't mean it can't just drop right back down, but it's unlikely. I'm going to try short again. And there's nothing wrong with trying again as long as you're being responsible with your risk. I could have hoped that it would have stopped there. What if it would have went up another 3 points, you know? 2 contracts, that's 6 points altogether. 6 times 2, it's $120. Which then that would make it very hard to make that up on top of the already $200 stop loss I had set. I'm gonna take one off there. I didn't add a second contract onto that one. I should have. All right, so now I just want to see it flush here. There we go, nice flush. The one time framing down. So this is where you can add one on if it retraces towards the top of the previous candle, expecting it to continue. All right, I'm gonna go ahead and add one on here. All right, so it's coming up to that previous candle's high. I'm gonna go ahead and add on another one. Expecting that not to be able to take out that candle's high. See that? See that? Rejects it. Now one good push here should pass that eval. I'm gonna take one off right there. Now we only need $100 more. All right, there it is. Eval passed. 53091. All right, the live account. Let's go ahead and exit this here. Secured my payout. In this account, I have 4 other ones that I need to work on, but I didn't really focus on those today. I was just focusing on one funded account at a time. All right, let's go over the 5 rules for risk management to get funded, pass evals, and get payouts. We'll go through each rule, and then we'll look at an example in the chart. Scale out. Rule number 1. So this is mitigating your risk by exiting half at 1R. 1R plus 1R minus 1R equals 0R. All right, I'm going to go ahead and enter short here, and I'll show you what I mean. If I enter 2 contracts, that is a total of $80 of risk because each contract has a point value of $20, right? And I have 2 contracts times 2. And then that means that I have per point $40 of risk. That means to have $80 of risk, I would be risking 2 points. Cool. Now it's going to let me take one off at 1R, which would be $40 profit. Boom. Took it off. I only have now a remaining 1 contract with a stop that is 2 points away. So now how much risk do I have left on the trade total? That would be $40. So now what is plus 40? Because I got $40 in profits, plus 40 when I exited there, minus 40. What does this equal? 0. It's 0. I have $0 of risk left in this trade, theoretically, because I already took profit, right? I already scaled out. So I have mitigated my risk. Now, if you do this at like 2R, let's say you did it at 2R. So you had $80 risk on, you exited at $80 profit on 1 contract, which would be 4 points. That's 2R. 2 units of risk, if you want to call it that. So now, how much do I have left in terms of risk? I have $40 left on my stop, but I took profit, and now I have $80 profit. So you just go 80. So you go plus 80 with our minus $40 left of risk on. So that equals plus 40. So no matter what, even if you get stopped out, you will have a plus $40 trade. Cool, right? So it guarantees you a winning trade, and Nasdaq gives this up pretty much every single time because it's so volatile. As long as you're entering at the right time, I almost always get my 1R, my 1 scale out off, especially if I'm shooting for 1.5 R. It's every single time, just about. So that way when I take a loss, it's not very big. And then one of the other rules helps minimize losses even more. So if you add these 2 together, it's really increasing your chances of success. And now we are on rule 2. This is going to be exit when wrong. When the trade is no longer valid, exit, saving on average 1R or more. So you have a good example of that in a trade I'm in right now. It's pushing up. It wasn't supposed to go past the trend line. It's went past the 50% of this area here. So now I'm just waiting to see how it reacts to this doji that's right here. And then if it pushes up one more time, I'm going to go ahead and save my stop. Boom, out. Now you may not think you're saving a whole bunch, but you'd be surprised because there's going to be slippage that plays into it. And there, I just saved myself at least an R, and you're wrong. You can't tell me you don't. I know you know when you're wrong because I know when I'm wrong. All right, one time framing. Let one time framing dictate when you exit after your profit target's been hit. So you guys saw me do that today. Let's go ahead and go back to that price action. Here's a very good example of it. Let's say your profit target was this low. Most traders are going to put a limit order there. They're going to go like this. They're going to put a limit order there to exit, right? But wouldn't it be better to just wait until price told you? But you have to learn how to identify prices like language, right? So one time framing is the language of expansion. Is expansion. This is expansion. That's expansion. That's expansion. Took me a while, but I learned that this was the way. As you saw today, I will stay in the trade until the previous candle's high is violated. So nope, I would stay in. Nope, staying in. Nope, staying in. Nope, staying in. All right, and then there I would exit. So how many extra points did I get? I got an extra 10 points. And how many points did I give up from the low to the top? 2 points. That's a huge, huge difference, right? I gained an extra 10 points per contract. That's 200 bucks, while also limiting how much I gave back with the trailing drawdown. This is a huge, huge thing. Just between rules 1 and 3, let's say you were close to passing evals or you were close to getting a payout. If you implement these, like you're there. All you gotta do is just implement them. All right, rule number 4, add on pullbacks. If price pulls back, enter and add on. If willing to do rule 2. So what was rule 2? Exit when wrong. So that one's pretty self-explanatory. Like if you're able to exit when the trade's going against you and you know you're wrong, then you can add on and pullbacks. All right, and then rule 5, no bias. I say stay away from daily bias. Stick to where you think price is going, not getting stuck on long or short. Let's say for today's example, you had a daily bias that was up. You thought price was going to go up because you weren't coming to my live streams and you don't have a bigger picture understanding, or you're listening to someone else on Twitter or something. Who knows what it is? But either way, you weren't at my live streams or else you'd know where price was going. And your bias is bullish today. Do you think you would have been shorting here? No, you would have been thinking it's long. You'd have been, oh, it took out liquidity. Liquidity runs the market. That's what I've been taught. I don't think price is going to go lower. It's a turtle soup here, blah, blah, blah. But in reality, that's not how the market works at all. It's not liquidity, it's inefficiencies. And that's why we saw price go to the zones I outlined there and not liquidity areas. And do you think you would have took this one short? No, you would have been trying to go long. By keeping your like a daily bias out of it, you're going to be able to be fluid with your trading. Maybe you want to get funded, but you're just not quite sure. Maybe you have reservations about the companies, like are they legit? You see a lot of Forex funding scams and people not getting paid out and all that. I went through that same thing. I went through the Forex funding. I went through all the crappy prop firms. And then eventually found futures funding, and then found out, say, about 5 companies I trust. I've met with the owners. And now that I really trust them, I have verified them myself. That's why my website's name is Verified Funding Companies, because I have verified them, done my own checks, went through the programs, gotten payouts, all that. So I guarantee they pay you out. Let's say you come to my website, you use one of my discounts, and then you follow the rules and they refuse to pay you out. I'll pay you out, guys. I got you. I have the best discounts in the game. that you're going to find. If you want to get funded, make sure you check out my website, verifiedfundingcompanies.com. The best discounts in the game for traders. I appreciate you guys for watching, and I will see you in the charts.